Good morning to some and good afternoon to others. I appreciate you making time to learn more about the exciting state of the aviation insurance market and maybe get some strategies on how to address your next insurance renewal. And it is nice to see a couple of familiar faces on the screen here, some names I recognize. And as Dallas said, I originally was at 70 slides, and she said we only have an hour, so I toned it down to 7 slides for everybody this morning here. But please put your questions in the chat or send them to Dallas there, and she'll flag me if I'm in the zone and not paying attention here. So again, my name's Kyle White, and I'm with Marsh McLennan Agency. And I used to tell people I'm just an out-of-work pilot that happens to be in the insurance industry now. But after about 20 years, I think it's going to stick. So I used to fly King Airs primarily. I also flew charter of some Part 135 operations. So I really enjoyed my time in the cockpit. But one of the things that I learned when I made the transition to aviation insurance about 20 years ago was that there's so many people out there that manage aircraft, that operate aircraft, that own aircraft, and they truly didn't have a good understanding of how aviation insurance worked. And one of the comments that was made to me when I was making the transition was from a director of operations of a corporate flight department for a Fortune 500 company. He says, Kyle, if you ever figure out what this pilot warranty thing is all about, let me know. And I knew nothing about insurance when I made the transition from the cockpit to the desk here. And I thought, my gosh, who puts a warranty on pilots? What does that mean? That's how little I knew. So I tell that story just to remember and remind everybody that I recognize how scary this can be. So what I'm going to do today is going to be an education on where we're at in the marketplace and some ideas on how you might be able to have an easier and less frustrating renewal process. So really four items we're going to cover today: a state of the aviation insurance market, the underwriters' perspectives and some of their mandates. I'm a broker, so what I do is I represent buyers in the marketplace. I counsel buyers, give them some ideas, and then we strategize and we go to market with the underwriters to see what kind of program we can build out for people. So I'm a broker. The underwriters, behind the curtain, so to speak, like the Wizard of Oz. We don't have any on the call with us today, but we'll talk more about how you can get in front of those folks. We're also going to talk about the importance of a strategic mindset. How can you be something beyond just 2 pieces of paper? And the ancillary coverages. We're going to touch on a little bit of those. Pick your battles, because there's over 20 ancillary coverages within an aircraft hull and liability policy. I also recognize that the people on our call today, some of you may be looking at buying maybe a single engine Bonanza. Some of you fly it yourself. Some of you may be a CFO or a risk manager of a large cabin business jet with operations all over the world. So I recognize the diverse group that's on the call today. So it's going to be very, I think there's something though that applies for everybody. So state of the market, past, present, future. So when we look at how we got to where we are today, I feel like every year it's something. There's always something there's always a curveball that the world is throwing at us. And I don't know about you guys and gals, but I get tired of hearing the excuses. I get tired of hearing, well, because of the Boeing 737 MAX or COVID or some of all those things that doesn't apply to us. I own and operate a Bonanza and a J3 Cub, and I wonder, well, how does the situation in Russia affect the insurance premiums on my Bonanza? And so I understand the frustration there. And things to think about is how everything is tied together. So you have, again, the past, the Boeing situation, COVID, and people have been calling nuclear verdicts. So let's talk about the Boeing situation. That's looking like it's going to be a multi-billion-dollar loss, and everything is reinsured through the reinsurance markets in Europe. So when you look at the general aviation insurance markets, like USAIG, Old Republic, AIG, CV Star, all the names you've probably heard, they're making underwriting decisions, but they're also hedging their bets to a certain degree and at a differing levels in the London market. And so what they are going through is affected by some of these major global situations. One of the things I think is interesting is when you look at COVID. So while I don't sit here to say I'm an expert on the airline insurance market. That's not my area of expertise. We have another division here that does that. It is my understanding, though, that the rates that how they are rated, the airlines, is based off of passenger miles flown. So every airline estimates how many passenger miles they think they're going to fly in the next 12 months. And when they go to market, a lot of those premiums are based off of that. Well, when COVID happened, the airline industry, as we all know, pretty much all but shut down. And so the estimated numbers that they thought they were going to fly was dramatically less. So because the rating was based off of that, the airline industry was able to go back to their insurance company and get a refund. So now we had hundreds of millions of dollars of premium be pulled back out of the aviation insurance pool of money, if you will. So that again, that was painful for the past. And then the nuclear verdicts. I'm sure we have some aviation attorneys on the call today, and they could speak more intelligently than I can about specifics. But what we're seeing is when airplanes have a bad day, pilots have a bad day, there's bent metal and broken bones, the jury awards are massive. There was one in Texas. It was aviation related with a ground handler that was struck by a vehicle, and that judgment was massive. I believe it was over $100 million is what the judgment is on that. So significant nuclear verdicts is what they're calling them. All right, so that's the past. What do we have going on in the present? Well, I was talking to an underwriter this morning, and we talked about how this is almost the perfect storm with four variables from a rating standpoint. And you have the record demand. When you look at business aviation, when you go and talk to an FBO, an owner of a multiple FBO chains, they're saying, look, we don't have enough hangar space. We're selling more fuel than we've ever sold before. We're having more movements than we've ever had before. And when people are moving aircraft around, sometimes they get too close to each other and we have some bent metal. So we're seeing more attritional losses on the ground. Also, we have transition pilots, and some of you may be on the call today want to know more about, hey, I want to transition from a TBM to a citation. How do I do that? So we're seeing a lot of transition pilots get into stepping up to aircraft, and some incidences and accidents there as well. Social inflation, it goes back to the nuclear verdicts, but it also has to deal with supply chain issues. I mean, if we have an older citation and it's damaged and we need to repair it, sometimes you go to Textron and they're saying, hey, it's going to be a while before we can get the parts. We're going to have to manufacture some parts. So supply chain issues, and that's driving up the cost to repair the aircraft. I mentioned the reinsurance treaties moments ago, so I won't harp on that. And the training requirements. So, historically, depending on where the market was, there was more flexibility around training. And in this market, which is referred to as a hard market, the insurance companies are getting a little more stringent on the training requirements. Many of them are wanting simulator-based training for the jet aircraft and turboprops every 12 months. So when you combine people buying aircraft that are new to the market, people sell and use aircraft, and other people are buying them. You have transition pilots. We have an aging pilot population that is transitioning out of the cockpit and new pilots transitioning into the cockpit. You combine all of those. It's just like yesterday when I went for my annual medical. When I got done with that medical, I went ahead and booked my medical for 12 months from now. I would suggest that we do that on training as well. Try to get in there and get that training booked as soon as possible. Otherwise, you're going to be having a conversation with your broker about, hey, I can't get a training slot. I'm on standby for the next 4 months. So we're seeing some situations there. So what could happen in the future? Again, curveballs. I feel like nothing is predictable anymore. But global tension and nuclear threats. And if you read your insurance policy, there's a clause in there that talks about terrorism. There's also another section there that talks about war hold and war liability. And if a major country like, say, Russia, were to launch a nuclear weapon, that's going to wreak havoc on aviation insurance policies, because there's clauses in there that say that they are going to automatically cancel some of your coverage if a nation like Russia were to launch a nuclear weapon. And you're saying, okay, well, I'm here in the United States. How does that adversely affect me? Well, if your war hull coverage is automatically canceled and you have a lien against your airplane, you are most likely in breach of one of the loan covenants in the policy. So banks require war hull coverage. War covers strikes, riots, civil commotion, and government seizure, whether foreign or domestic. So that could be a problem in the future. Some of the major aviation insurance carriers are looking at how can they readdress this situation so that we can go ahead and be proactive and issue some endorsements now, where it would be less adverse for us folks here in North America.
Hey, Kyle, we have a question.
Yes.
Okay, what happens when training is not available from simulator-based providers?
Exactly right. So, hindsight is always 2020. That's why I made the comment a second ago about, hey, you're in training right now. See what you can book out 12 months from now. If you have to cancel later, you can cancel it later or move around, but at least try to get a date. I have found, I cannot think of a situation where an underwriter has declined and said, hey, I'm clipping your wings until you get the training done. What they're going to want to see is they're going to want to see that you are on a standby list. So document it with your training provider that you're on a standby list, and your hard date to get in, whether it's 6, 7, 8 months from now, whatever the case may be, that you have that hard date and that you're on a standby list. And what additional training might you be able to do in the meantime? But again, I haven't seen anybody get their wings clipped because of that. They have been understanding and flexible. Thank you for the question. Okay, so an underwriter's worldview, boy, they are just pessimistic creatures, that's for sure. So a lot of bullet points up here, but basically they think the worst. They think the worst, and they think they're getting snowballed. So it's very important that we ask. Every insurance carrier has different mandates and guidelines coming down from management. Their reinsurance treaties may require different criteria, maybe with respect to training. They may be reducing their capacity with limits of liability they can offer, as well as hull coverage. So make sure that when you're talking to your broker, you understand what your current underwriter and what the other underwriters in different markets are being told and being implemented from management. And also, the underwriters are always saying, what if? What if this happens? What if that happens? What am I missing? And I love this one. I've heard this one before. So we get a lot of that pushback when we're dealing with folks transitioning from piston airplanes to turbines, or from a turboprop to a jet. When we talk about the transition, and we'll get to that here a little bit. And then I need to document my file in case something happens. That goes back to the training. If you can't get into simulator-based training right now, they want to document the file. So, for them, the email conversation that you have with CAE or SimCom or whatever. And do I trust the messenger? Believe it or not, we have some shady people in this business, and not all underwriters trust all brokers. So you definitely want to make sure that your broker has a good reputation amongst the aviation insurance underwriting community, because the underwriters can say, look, I just don't trust this broker. I've had them lie to me before, or mislead, or withhold information. So it's very important that the brokers and the underwriters have a good working relationship. And at the end of the day, we need to make them feel warm and fuzzy. And again, we'll get into the strategy behind that here in just a second. Oh, hey, guess what? We're getting into that right now. Strategy and humanizing. All right, so I remember a while back I had a client say, it just amazed me. I have a 2-page application that I'm completing, and we're going to turn that over to an underwriter, and they're going to put at risk multiple millions of dollars from a liability standpoint and a hull standpoint, just based off this 2-page application. Well, that was a soft market. Back in the soft market, you could get a cocktail napkin. You could be at the National Business Aviation Association or up at Oshkosh at EAA, and you could sit there with an underwriter and with the client, and we could just talk through this, put on a cocktail napkin, and everybody spills a drink on it to consummate the relationship, and we move on. But now it's more detailed than that, for all the reasons I just pointed out in the past 2 slides. So in addition to the applications, I want to stress upon everybody on this call that when you're completing those applications, you want to make them legible. If you can type them out, type them out. But definitely make sure your print is a lot nicer than mine, because it's a reflection upon how you're treating the process. Underwriters love what they do and what they're looking for, right, wrong, or indifferent. They're looking for, okay, is our client treating this renewal process or the process of acquiring aviation insurance in a very professional manner? Because if they aren't, how are they operating their aircraft? Are they using the POH? Do they have a check? Are they using checklists or not using the checklist? What are they doing for maintenance? They have the proverbial oily rags over in the corner of the hangar. So make sure those applications are very nice, neat, and clean. I would also say, what is your story? So this is especially important for new clients that we're taking to the market. So if you're a transition pilot or you're buying a new aircraft, you're going to be a new risk to the market. What's your story? It doesn't have to be a long biography. Just write up a one-pager about this is who you are, this is your flying experience, this is what you want to do, this is what you're going to do. If you're a transition pilot, here's what my transition plan is. We need to go to the markets, go to the carriers. We need to go to them with a plan, because it's so easy for a pessimistic underwriter just to say no. We need to go to them and with a game plan of, hey, look, we put a lot of thought and effort into this, my broker and the aircraft owner, and here's what we envision. Because when we do that, the underwriter is more inclined to say, wow, they have put a lot of thought into this. Normally I'd say no to this, but I feel like they're really going above and beyond here. And then they'll make some tweaks to it. Well, maybe we should do this with a mentor pilot, or maybe could we do another recurrent after the 6 months after the initial, so they can tweak things. So we need to know what the story is. And that spills over into your risk profile. I was talking to that same underwriter I mentioned earlier this morning, and we were talking about the difference between somebody that is buying an aircraft and they are using it for their personal needs. They are taking friends with them, and they're gone every weekend, going to new and exciting places all over the world. That is a much different risk profile than a situation where we may have two professional pilots operating a business jet, and they're going to the same 6 places every month. Because when you look at a risk profile where they're going to the same place every month, that tells the underwriter, wow, they must really know the airport environment. They must really understand the instrument approaches. They've seen this in day VFR conditions, and now when they go in at night IMC, they'll remember there's mountains over here. I've done this missed approach before. I need to make sure that I'm on course. So they're going to look at that differently than if you're going to a different location in Mexico every weekend. So highlight your risk profile. And again, those are always things that we can find out on the application. And objectify your operation and needs. So I look at the world differently than I did 20 years ago in terms of when I walk onto an airport. When I get on an airport and I look around, I see a scissor lift. I think about mobile equipment coverage. When I see the Uber driver or a limo driver come on airport property through the secure area to a jet to pick up passengers, I'm thinking about on-airport auto and the nuances that go along with that. When I see a hangar with multiple aircraft in there stacked wingtip to wingtip, I see that differently than if I see one hangar with one aircraft in it. So when you look at all those different ancillary coverages, you need to be strategic in those, which takes us into our next slide. Ancillary coverages and customization. Your operation is unique, and so should your policy. So you can get an off-the-shelf policy. The broker community has something that's called Aero Quote. And so if you have a Cessna 172 and you call any broker, now any aviation specific broker, they're going to take your information, they're going to put it into a system called Aero Quote. Aero Quote then goes out to about a dozen different insurance carriers and automatically spits out the quotes. It's a computer. The computer is spitting it out. And you're going to get all the same ancillary coverages. Deductibles are typically non-negotiable. Every carrier is going to be a little bit different. Some will have them, some won't. So that's very automated. But when you start looking at turbine aircraft and transition pilots, that's where a human comes into play, and they're actually going to look at it. So strategize with your broker over the ancillary coverages and what is important to you and what isn't important to you. For example, maybe extra expense is important to you. So if you have one aircraft that you're using for business, and let's just say it's a King Air 200. You have one aircraft that you're using for business, it's King Air 200, and you fly from your home base out on business to another airport, and you're there, and you take off from there, and you ingest a bird. You hit a bird. You go, oh, this isn't good. I see a lot of feathers and blood everywhere. I'm going to come back around and land. So you come back and around land. That is a covered loss. So that's going to trigger the policy to open up, and everything's available there for you. And there could be a coverage there called trip interruption. So trip interruption is going to pay to get you either back to your home base, or it's going to pay to get you to your next destination. That's what trip interruption is going to be. And trip interruption could be $1,000 per person. It could be $25,000 per person. It could include crew. It could exclude crew. So that limit and that wording could be different. Well, if you're using the aircraft for business, that may be a very important coverage for you to have in there. The next line item on there is going to be extra expense. So if you are flying your airplane a lot, you're always gumming and going, and you have one airplane, and now it's down. And we just talked about the supply chain issues with getting it fixed. And now we could be, 60 days, 90 days, 180 days away from getting this thing repaired. You need to look at what your extra expense coverage is in there. There could be a per day limit. There could be a per occurrence limit. There could be a 5-day wait period, a 3-day wait period, or there's a lot of different wording that goes into that. So you need to customize that to make sure it's going to meet your needs. And what the extra expense coverage is going to do is, after trip interruption, extra expense kicks in, and it's going to pay the difference. I'm speaking very broad terms here, but the concept is it pays the difference between your charter bill and the direct operating costs of your aircraft. So if you go to Conklin and D-Decker, for example, and it says your King Air 200 costs $1,000 an hour to operate, and you're chartering another aircraft of like kind and quality, whether it's King Air 200, King Air 90, King Air 350, and your charter bill is $2,000 an hour, it's going to pay the difference between your DOC and that charter bill. So that can add up pretty quick, especially when you start looking at jets. You start looking at a large cabin jet that could be costing $10,000 an hour, and your DOC is $3,000 or $4,000 an hour. And if you have a $5,000 per day limit, I mean, shoot, you're going to get 1 hour of flight time out of that Gulfstream, and then you're going to be on the hook for it yourself. So you really need to make sure that you're looking at what your needs are and what your coverages are to customize that. Again, do you know what's in your policy? Do you know what exposures you have? Do you have when you fly out, do you have your customers or your guests park their nice cars inside your hangar? Well, that's a garage keeper's coverage. So if you have them parked in your hangar and you're trying to be a nice host, and you pay a detailing company, or like when I did it when I was in high school, you paid a kid to come in and clean the cars for them, and they damaged the cars, do you have garage keepers coverage? So know what your exposures are, and customize that to your policy. Also, do you know what you want covered and how much you're willing to pay for it? So all those coverages, in my opinion, are negotiable, and it goes into what you want to pay for your premium. Talk to your broker. What is the budget that you have for insurance? Do we need something as simple, very bare bones to check the box, or are we wanting a very robust policy? And sometimes the difference between a very robust policy and a bare bones policy might only be a couple $1,000s a year. I was thinking, reminds me of an operation this past summer. It was a legacy jet. The premium was going to be $61,000. And literally we had another option for $59,000, but the extra expense was capped at $1,000 per day, whereas the $61,000 policy, it had unlimited per day. We had $1 million of coverage, unlimited per day, and the client wanted to save $2,000 and went with that $59,000 policy. So make sure you look over that in detail, and build your policy to meet your specific needs, which is kind of what I'm saying to do here. So we've been talking for about 25-30 minutes here. I think there might be some more comments in the chat box. Again, I don't have death by PowerPoint here, so I would like to open it up to questions and answers. It's always important to me that we have everybody gets something out of our time together when they schedule this.
Yeah, so if you guys would like, you guys can unmute yourself and ask him directly, or you can put it in the chat. This is our time for questions and to get your specific questions answered.
And while we wait for some questions to come in, I do write articles from time to time for the King Air magazine. I believe we have another one coming out here pretty quick, and it's going to talk about what we're visiting about here, only in more detail. So check out the King Air magazine and my name. You'll see some articles on there. So I got some good questions here. What is the prognosis for coverage of an older pilot? I am glad you asked. You need to be very strategic. Once you start getting into your 60s, you need to get very strategic about what the long-term plan is. I'll tell you a quick story. We had a gentleman that had a King Air 90, then he had a King Air 200, and now he has a King Air 350. Been a customer with us for almost 20 years now. When he started with us, he was in his late 50s, and he developed such a good relationship with his underwriter and knew that he was had the means, was going to want to fly for a long time. He worked with that underwriter when they were at one company, got to know him, and then after that underwriter left and went to another insurance carrier, he followed that underwriter to that other carrier. And the reason he did is because he knew that underwriter was going to bat for him and was also in a decision-making authority, and was able to keep him in the King Air 350 single pilot with $20 million of liability coverage up until he turned 75. And so we had this mapped out for several years. And then after he turned 75, we had to move him to another carrier, and the premium quadrupled. But he's still able to fly for a few more years. So I tell you that story to emphasize that you need to make sure that you're having these conversations sooner rather than later with your broker and with your underwriter. Because once you hit, and every carrier is a little bit different, but once you hit 65, 67, 69, those are kind of markers in the sand, if you will, on where you need to be. So I would say that by the time you're 69, you need to make sure you know the carrier you're with is going to be able to write you for a while. But again, we have carriers that are writing turbine pilots and turbine aircraft all up to their 80. We just have to get with the right one. So it's very broad nature of the answer, but every market's going to be a little bit different. Just know who you're aligning yourself with. Let's see. This over here. Any insight on the increases based on age? I think really it comes down to whether or not they'll do it. They'll either write it or they won't. So to sit here and say they're going to put a 10%, 20% surcharge on it, it's hard for me to say that they're doing that. I would say that another strategy is if you're operating, say, a Bonanza, say you have a G36 Bonanza and you got 6 seats in there, look at maybe look at taking 2 of the seats out. So now you have 4 seats, because the liability premium is associated with how many seats you have on there. There's one insurance carrier out there that says, hey, I'm cutting my liability limits and I'm not going to insure anybody with a 6-seat airplane. Well, you take 2 seats out, now it's a 4-seater. So I would look at that. To consolidate all the extra information. So to the question from Vance, perhaps this will answer your question when we get that. It's a 2,000-word article. We'll be sending Dallas will be sending that out, and if the answers are not there for you, you'll have my contact information. I'm happy to walk you through anything else I'm missing on that. How do aircraft owners that have their aircraft assigned to a management company ensure that they have at what level trip interruption and extra expense coverage? Can the owner hire a subject matter? Absolutely. So Gene asked, how do aircraft owners that are on a fleet policy, they're not seeing all the details, how do they know what they have? I would say that you should ask them, hey, can I get a list of all the ancillary coverages? Sometimes on the fleet policies, one comes to mind, one that has about 100 aircraft on it. And on the owner lessor endorsement or the managed aircraft endorsement, it lists all of those ancillary coverages that are there for the owner. So they should be able to provide that to you, Gene. If for some reason they give you pushback on that, say, well, can't the broker type up a 1-page letter? Well, that's not on the official policy form. they should be able to type something up to give you that level of confidence. And yes, specifically, can the owner hire a subject matter expert to verify coverage? Yes, there are some people out there that they aren't brokers, they aren't underwriters, they're specific consultants. So they work with the buyer as a third party on a fee-based service to review all the coverages. Can you name various reputable insurance companies in market currently through AOPA? So AOPA is a great organization. So is the EAA, and I'm sure there's others that are out there. So those associations typically align themselves with one broker, and sometimes those associations then align themselves with one specific carrier as what they do. So the broker for AOPA and the broker for EAA should be able to spend some time with you to talk about the different carriers that are out there and different options that are out there. That's what I would say. I would say that the broker out there for the AOP agency should be able to spend some time with you. And the broker that has aligned themselves with AOPA, they do have access to all of the different insurance carriers that are out there. And turbo Cessna, are you talking about a turbine or turbocharge or turbo normalizer? If it's the turbine conversion on the 210, it is limited markets, limited carriers that are out there that can write that. And if it's pressurized, pricing goes up significantly. Yeah. So if it's just a 182 turbo, I don't know all your situation. There are multiple markets that'll do that. But again, once you get over 70, they're going to start looking at that as well. All great questions. What other questions do we have? Any relief in sight for turbine helicopters? Well, I would say not in 2023. For our larger fleet that are professionally flown helicopters, we're seeing some stabilization there. Me personally, we're working on a good sized fleet renewal, and we're looking at single-digit increases. The 2023 market, a lot of the aviation insurance markets are working on their reinsurance treaties right now. And there's still a lot of unknowns about what's going to happen in 2023. I would say follow the HAI. If you can go to the HAI and get your broker to set up some one-on-one meetings with some underwriters, I feel like that will help you immensely. One of the things that we did not talk about, but since you brought it up on the helicopter standpoint, is quota share placements. So traditionally, in the soft market, and for quite a few years, one underwriting company would take 100% of your risk. Well, now if you are an owner pilot in a high value turbine aircraft, or even if you're a professional pilot and the whole value is over $5 million, you're going to want to explore a quota share placement. So that's where you have one carrier taking the risk. You look at your policy; it's the same carrier that you always have, but now there might be another carrier via endorsement, via a one-page document that says they're going to take 50% of that risk or 25% of that risk. So I would explore on the helicopters and on the high-value turbine aircraft that are operated single pilot. I would look at exploring a quota share placement. We found that has helped ease the burden on premiums as well. What are you seeing when an aircraft owner presents an underwriter with a third-party driver? Ooh, that's a great question. It's a great question from a familiar name there. So not all of the insurance carriers are excited about those dry leases. Specifically, there's one major carrier out there that says if you enter into a dry lease, we will gladly cancel your policy, issue you a refund, and you can find a new home. They do not want any part of the dry leases. Then we have other carriers that are more open-minded to those. So if you have a dry lease that meets their expectation, which means not on a cocktail napkin, but have an aviation-specific attorney or a knowledgeable attorney in this area, draft that contract up, make sure you put it on file with the insurance carrier. Because if you don't put that on file with the carrier, you very well could be violating your policy and would not have the coverage you think you have. So some of the insurance carriers are saying, okay, we will honor these dry leases, but we're only going to do 3, or we're only going to do 4 or 5. They'll have a cap on how many they'll do, and they'll charge you per dry lease. It started out where it was $500 a dry lease, but now it's not uncommon to see $2,000 or $2,500 per dry lease. But it's very important that you have that structured correctly, and it's extremely important that you put that on file with the carrier. Have the carrier issue an endorsement and a certificate of insurance that acknowledges those dry leases. I hope that answered your question. If you'd like, happy to get into that deeper if we need to. Next question: if you mostly fly a lone business, should you still have combined 1 million coverage or one? Okay, another good question. And yes, it is cheaper. It's cheaper to have a passenger sublimit of say $100,000 versus $1 million in coverage with no passenger sublimit. That $1 million of coverage is what they call combined single liability. So it covers the bodily injury and the property damage, not the whole, not your aircraft, but property damage you do outside the aircraft, as well as bodily injury outside the aircraft and bodily injury inside the aircraft. So if you're flying alone for business, yeah, you could save money by having $1 million sublimited to $100,000 per passenger, or you might even, depending on the carrier, you might even be able to get $1 million of coverage with no passenger liability. So that way, if you're taxiing and you run over the line guy or gal, you got $1 million of coverage for that. Or heaven forbid, you land on a highway, your engine blows, or you hit something. You're in your single engine aircraft, and you land on the highway, and a car swerves and goes into a ditch. You got $1 million of coverage to pay for that, the damage to the car and for the bodily injury inside that car. Next question: can you speak to industry standards and best practices related to aircraft policies for aircraft brokers that also buy, sell inventory? Single one-by-one aircraft policy for each aircraft bought, sold, or a policy allows multiple transactions. Okay, great question. So for those professionals that are on our call today that are brokering aircraft, they're representing buyers, they're representing sellers, or they're inventorying aircraft, a couple things to consider. One is you can get a reporting form policy. So you would put a down payment on that policy. You would have everything pre-negotiated with different liability limits, different whole value ranges, and what those rates are. So you can build out an Excel spreadsheet with your broker and your underwriter, and every month you report what aircraft you have in your inventory, and you pay your premium based off that monthly exposure. I would also, this is for everybody that's out there, if you are going to be working with somebody to represent you to buy an aircraft, I would strongly make sure that they have professional liability coverage. Here's an example of what something like that that's important. Say you buy an aircraft and you have a pre-buy inspection done, and you do the pre-buy, everything checks out, you buy the aircraft, you're flying the aircraft for a little while, and then you take it in for maybe a more extensive inspection and take it to another maintenance facility. They open it all up and they say, oh my gosh, you've got major corrosion issues. Or they look through the logbooks and say, wow, I can't believe you bought this airplane with such significant damage history. And you go, what? Corrosion, damage history? What are you talking about? I was told that this aircraft didn't have any damage history, didn't have any corrosion. Well, now your aircraft is worth less, right? This is a financial loss. It's not bodily injury or property damage. There's a financial loss. So if you go and sue that third party that represented you or that did that maintenance inspection and they missed it, if they don't have any professional liability coverage, you may be fighting a very, very hard uphill battle on that. I hope that answered the questions on buying and selling aircraft and inventory, as well as professional liability. What other questions do we have? All great questions. We got a few more minutes. Why is it so hard to get excess liability? If you can get $1 million with no passenger sublimits, I would argue that it's easy to get excess liability. Now, one market had a change in underwriting staff, and they are no longer offering excess, but there's another market that has stepped in. So for example, I'm working with a gentleman right now that has a citation M2. His primary carrier only wants to give him $5 million of liability coverage. We have two options. One, we can do an excess liability option. So I can get him another 5 million on top of that 5 for a total of 10. The excess markets will typically only offer you an excess equal to the amount of the primary. But you can either do a quota share placement or an excess placement. Best way to discuss 70 plus if healthy and all okay. So I love doing Zoom video calls with my clients and the underwriters, especially if they don't need if they're not in a wheelchair and they don't need a walker. If you're in great health, I would argue that a Zoom video call with your underwriter and your broker will bode very well for you. Last thing, Dallas, before we end,
Okay, Kyle.
going back to Ms. Barbera's comment there about the leased aircraft. If you guys are doing dry leases out there, make sure that you have your I's dotted and your T's crossed with the crew as well. It's one thing to be working with the aircraft owner, or if you are the aircraft owner and you have a lessee, to have a contract there and everything documented. But look at what you're doing with the pilots, because there's a big difference between paying the pilots from a W-2 standpoint, where hopefully there's worker compensation coverage, versus paying them as a 1099. If you're paying them as a 1099, you're really opening yourself up to significant liability exposures, as opposed to having them paying them under a W-2 standpoint and having the protection of workers' compensation coverage. That's something that I think is very commonly overlooked. There's a recent accident where we have two deceased pilots in an aircraft, and both of them were 1099, and it was a repositioning flight from the lessor home base to pick up the lessee. So the question, it's going to be a nasty loss. So a lot of it's going to come, while there was no passengers on board, we had two independent contractor pilots that were on board that aircraft. So it's not going to be good. So I would recommend looking at that. That's everything that's come to mind, Dallas. I know it's kind of high level view, but I know we also have a lot of a very diverse group on here. Again, Google my name and King Air Magazine. I've been writing for them for 10 or 15 years, quite a while. And there's quite a few articles out there. And Dallas will get you the sneak peek on the one that's going to be coming up in the November issue.
Yes, I will. So thank you everyone for showing up. And if you need anything, just give us a call. And thank you, Kyle, for being here and spending your time with us.
You're welcome. My pleasure, Dallas. Love educating the community out there.
Great. Thank you, guys. Thank you for showing up.